morning, good afternoon, good evening, traders from across the globe, and welcome to the 864th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Traders, how are you? Today is Thursday. We are filming our video for trading on Friday. That would be May 4th, 2012. Couple of things to talk about. One, the OMNI has been flip-flopping unlike any other time I've seen or can remember since 2006. Many of you Omniacs that have been with me since then might remember a time back in 2006. We were stopped out 5 days out of 5 in a row. And I remember that happening right during the OMNI flip-flopping. Then the market got in the groove, OMNI got in the groove with it, and life went on. But this flip-flopping that we're seeing now is very reminiscent to what we've seen in 2006. Now, it doesn't mean the market will go up or down. It does mean the market is definitely ready to vacate this area. Admittedly, it's been chopping OMNI up like crazy the last 6 or 7 trading sessions, but that's part of the game, and we know that. Market should get in the groove and get us out of here. But we are flip-flopping like I haven't seen in a while, traders. And if you look at the daily chart of the S&P and sit back and look at it, you'll recognize that in the last 20 days, almost every day goes opposite the other. Then there's a 3-day period where the market goes up, up, up in the same direction, and then it starts doing this again. Now that's tough. That's choppy, traders. You need to be very careful out there. As you can see, if it's not going to go in any direction, it's a problem. But that brings us to something else. The old adage, sell in May and walk away. Is that valid? Traders, something very interesting about that old adage that we need to talk about and falls right in line with all this OMNI flip-flopping. In May, and I've gone back and done the research since 2000. I went back a lot further than that, but for the purpose of tonight's video, I am going to show you what seems to happen during the month of May every year since the year 2000. And traders, here it is. On some occasions, the month of May goes up for the first week and then gets pounded. About 70% of the Mays that have passed since 2000 to 2011. And a lot of that has happened in the last 5-6 years. So what we know about Mays are that you might get lucky for the first week up, but on average, that adage is valid, and I'm going to show that to you in a chart in just a moment. Now, remember, not every May is going to produce that, but lately that seems to be what happens in May. This is May 4th. It's the first week in May. Today's Friday. If this market cannot make a new high, let's say tomorrow's unemployment report shows that the economy is really picking up and the employment report is as bullish as can be, we need to go make a new high and continue on, because this is the first week in May, and if we do not make a new high in the markets, I mean very soon, like tomorrow, this thing is going to start to come down. Now, in the last few videos, I showed you some patterns, especially in the transportation average, that should produce a rally and get us out of here. So that would tell you that tomorrow's report should be bullish. But that's if you look at a little bit longer term. If you look at the short-term charts, what the analysis looks like tonight for tomorrow, what the charts look like tonight for tomorrow, what the outside reversal down bars look like tonight for tomorrow, if the fundamentals always come out in the reports first, and we know always isn't always, but most occasions, reports and fundamentals always come out in the charts first, that means the analysis we're going to go over tonight for tomorrow shows us a bearish report and the beginning of the down wave in May. Now, I really hope it doesn't happen, but if it does, it might cost us a stop. For the sake of the economy, I hope the report's bullish and we go up. But the analysis we're about to go over says that is not going to be the case. Traders, as we all know, futures trading is extremely risky and can cause substantial financial loss if you do not recognize that a stop is your best friend, if you do not put your stops in first, if you do not have risk capital to lose, and I mean when OMNI's flip-flopping, there's a chance of losing it. you need to not be trading these markets. But for you traders that understand the risks, let's talk about it one more time. Flip-flopping unlike anything we've seen since 2006, and we completely vacated that area after the flip-flopping. The old adage is to sell it in May and walk away. Is it valid? Is that why Omni's flip-flopping? With no further ado, let's go look at some charts.
Traders, Oscar Carboni is holding another Omni Camp live in Las Vegas. Omni Camp is an intensive 4-day course taught by the Wall Street whiz Oscar Carboni himself. Oscar has been analyzing markets and trading commodities on and off the New York trading pits for over 30 years. Trading for a living is a very difficult business. Oscar will simplify the process so that you can easily understand and analyze the markets. Classes are limited. For more information, call 702-629-4755. Our phones are staffed 24/7. Futures trading is risky and can cause substantial financial loss. Trading futures is not suitable for all accounts.
Okay, traders, here we are. Let's take a look at it. The old adage, sell it in May and walk away. Is it valid? Let's go to May, the year 2000. This rectangle is in red, so it represents that May the market cracked, and it cracked pretty good. Then we go to May 2001, and you say, oh, you know what? It was red, but the next one was green, and that looks like, all right, nothing to worry about. And we go to 2002, big downdraft after the first up week in May, big downdraft. Then we go to 2003, and you have an up month in May. So it looks like it's even, right? Red, green, Oscar. What are you worried about? Well, nothing. Let's go to 2004. We have a neutral month. It goes up a little, goes down a little, doesn't really go anywhere. 2005 has a green month, and you say, all right, that's 3 green months. We started in the year 2000, not bad. Then we hit 2006, big red month. So we have a big down month in May in 2000. 2001, it goes up a bit. Big down month in May of 2002. 2003 goes up a bit. Then we have a neutral 2004, an up move in 2005, and then May of 2006 starts to break. And here's the thing. As we now start heading towards 2012, you'll recognize that Mays start to become treacherous. Look at this. Here we go now. 2006 we've seen it was a down one. You have an up one for 2007, but remember that's when the all-time high in the S&P was put in. Then we have 2008, big down move. 2009, basically unchanged. You can call it down, but we'll just call it neutral. 2010, big down move. 2011, big down move. Here we are, first week of May. Interesting, here's the first week of May in many of these years had an up week for the first week of that month, and then it would crack. So you had an up week and a crack, an up week and a crack. This one went up, an up week and a crack, an up week and a crack, actually all down here. This had a little bit of an up week and then a crack. Here we are after the first week in May. You know, it looks like as you're looking from 2006 forward, you are going to get hit here. So here we are at the end of the first week of May. The cycle shows us that either it's neutral or it's going down, and the Omni has been flip-flopping for 10 straight days, if not a little more, and that's probably reminiscent of us vacating the area. So if vacating the area doesn't mean up or down, this certainly tells us that the odds are good that down is the way we vacate. So that is looking at longer-term analysis and just taking into consideration the old adage, sell it in May and walk away. Yes, it's very valid, especially in the last 5 to 7 years. Now, let's get up close. What's the analysis look like for tomorrow, the last day of the first week of May? Outside down day reversal. It's an outside down day reversal. What does that mean? NASDAQ daily bar. Yesterday's bar was here. Today's bar went up higher than yesterday's, went lower than yesterday's low, and then settled below yesterday's bar, rendering this an outside day down reversal. So that tells us right off the bat, you have to look for some downside. Then we go look at the Russell 2000, a big mover, and lately a big leader. Extreme outside reversal down day once again in the Russell, below the average, still inside of that big flag. It has never been able to get out of it. Now it's settled under it right here. And we're at the last day of the first week of May with outside reversals. Now look at this, traders. I cannot find a technical indicator pointing up. This is the technical indicators for the S&P. Down, down, down. You name it, I can spit out one. RSI, WADX, stochastics. If it's out there, it is pointing down right now. The next thing I want to show you is the indicators for the Dow. They are not looking very good either. They have turned and crossed and are now heading straight down. So, up close, short-term analysis says for Friday, this thing looks bearish. Stepping it out a little further, we know that the month of May is likely treacherous for the price of the S&P. So we have to be careful, and we have to say downside for Friday, trading May 4th, 2012. So traders, you've seen the charts. We have an absolute argument for why May certainly puts pressure on the markets. We have an absolute argument for why the downside looks pretty strong for tomorrow, indicating that the report will push us down as well. Traders, the Omni been flip-flopping like crazy. If tomorrow, with all the bearish indications that are out there, if this market turns around and flips back up, I might do what I did in 2006. And step off for a few days, go on vacation somewhere, and come back and attack this thing, because when it flip-flops like that, there's almost no way to get out of its way. Sometimes the best way is to just step out of its way. So we'll see. Omniacs almost never step out of a market's way, but there are times in my past where Omni tells me, look, step off for a few days, let this thing trend, and jump back in and do your job. So we'll see. What we expect tomorrow is that arrow sends this market down, that fundamentals come out in the charts first, so the report will be bearish because Mays are bearish almost exclusively lately, and the Omni has been telling us we're about to vacate this area for quite some time. Traders, if you like the analysis put forth in this video, please come on down to livewithoscar.com. Come to my free trading room where I could be there to help you understand the analysis and market movement much, much better on most occasions. And if you'd like to study with me for 4 days live here in Las Vegas, I am holding what we call Omni Camp. That will take place June 8th, 9th, 10th, and 11th. It's a Friday, Saturday, Sunday, Monday. It is an intense 4-day course. If you want to study with me personally here in Vegas, come to livewithoscar.com and click the Omni Camp banner, and I will call you back after you fill out your applications. All right, traders, remember, it's going to be vicious out there. It's going to flip around. What you need to do is do your homework, check your analysis against what I've shown you, place your orders where they belong if your analysis agrees, and don't worry when these reports come out. You may get a perfect fill when that report comes out. A good analyst does not step out of the way of reports, does not worry about reports, finds them in the chart and says, I'm placing my orders where they belong and let the chips fall where they may. I think you should do the same, always using stops. All right, traders, I'll see you at the site. Remember, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Sell it in May and walk away. Is it valid? Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.